also welcome both of our panelists. Ashish ji, you are on mute, but if it's all right, I will address you both with your first name, Ashish and Avinash.
Yes,
I have to thank our audiences right now. Saturday evening, if you're still in front of your system and if you're still listening to what's going on, then clearly you're quite the passionate follower of fintech and what's happening in that domain right now. Myself, I am a follower, but I do not understand it much. I'm really new. So I'm going to be dependent on both of these gentlemen to take us through all that's happening. And we have an interesting topic, which is about neo-banking infrastructure and how it impacts user experience. We did do a little bit of a discussion virtually on how this should pan out. Now, hopefully we will be able to pull this off well. We have 40 minutes to do this. Now, I'm taking advantage of the fact that between these gentlemen, they have more than 3 decades of combined experience on what they have been doing. And both of their companies are quite out there in exactly this domain. In fact, both of them have the attempt to put consumer first while they're looking at digital banking solutions. And not just globally, not just aiming to be global, but working with Indians or towards Indians who are global travelers already. From that perspective, what I'm hoping we can do right now, with permission from both of you, is just let's understand neo-banking a little bit. Now, the definition for laymen like me is that it has absolutely no physical presence and it is digital only. So it's not digital and mobile first, it's digital and mobile only. Is this definition right? If both of you agree, it's cool. If one of you disagree, you have to correct me.
No, that's correct.
All right, perfect. So now this is just, it's like a very fine kind of a base that is there. Let's just delve into this a little bit. What kind of a market gap really was it? Let's give 5 minutes to setting our tone over here. What kind of a market gap really was it that led to the rise of a digital and mobile only format? And who really become the first quintessential customers or consumers of this? Avinash, why don't we start with you? And then I'm going to go to you.
Yeah, so thank you for this opportunity, Noor. It's a pleasure. So basically, if you look at how, I'll just take an example which all of you would be familiar with, right? So think of UPI. UPI is a beautiful interface, wonderfully created by NPCI. And yet a lot of us are using a phone pay, a Google Pay, an Amazon Pay, right? The reason for that is the user experience, the interface, right? You want an interface where if you have 3 bank accounts, 4 bank accounts, all their UPI IDs can be linked to it. You want a simpler interface, more easy, more intuitive. Today, I'm just going to extrapolate this example, right? If you look at what happens with banking, while banks have done a phenomenal job over the years to digitize and try to make it easier for users, still there's a difference in the experience that you may have with a new age tech company and the UX and UI versus a traditional bank, right? And take any bank that you would have banked with in India or even the global banks. And that's why this is a global phenomenon. Banks have recognized that, their core competence is to manage risk, to be risk averse, to build trust with the consumer, and not necessarily to create the most phenomenal cutting edge user experience, right? So a lot of neobanks, what they are looking to do is to step in and fill this void, right? As millennials are coming in, as younger audience are coming in, and in fact, even older people like me are demanding a more enriched experience, right? So that's when you see that, there's an opportunity and there's a gap. And if you can step in and fill that gap and create that experience for users are likely to sort of coalesce towards neo-banking platforms. That's the nutshell explanation that I can give.
Super. Ashish, I actually want you to add on top of this. What I also do want to understand is that how would this customer be, at a base level, different from a regular bank's customer? As in, are there any quintessential traits that will not make a regular bank's customer a neo-banker?
Yeah, sure. And thanks for the opportunity. So I will try to answer your question. But before that, this is a very good question to start with. Why neobank, right? So what was the gap? So let's see it from two perspectives. One is from the bank perspective, right? And then the customer. So bank, see the area which bank also realized over a period of time. One, that they were not able to expand the range of their offerings. So that was the limitation which banks were having, right? They have savings account, they have loans, insurance, and so on and so forth. But once the customer is coming to their, to the bank, at that point of time, maximum they can offer them, only one offering. So that was one of the gaps, right? So they don't have the platform to do cross selling, they don't have the platform to do, some promotions and so on and so forth. The other challenge which bank was facing was that they were unable to unlock the unserved markets. For example, if there is a small bank in Kolkata, it is very difficult for that bank to get a customer from Chennai. So these were untapped markets which they want to definitely tap and get some ROI out of it. And the third, which I believe definitely was one of the reasons and the gaps, was the banks were not able to figure out the new revenue streams for a period of time. Mm-hmm. So they need to get the new revenue streams, and probably by two things. One, they have to reduce the cost, and for which the digitalization was the reason, right? And then get more customers. So that was from the bank perspective. Coming to your question, in terms of the customer's point of view, definitely Avinash covered a lot of it in terms of the customer experience, the CX. I think that the overall culture is changing now. In a WhatsApp also, when you see, when you send a message, you are very very excited to see whether that person has read that that comment or not, right? So that is the level which millennials are today. They want to see instant reaction. There was a report which said that if there is the millennials, if there is a website which takes more than 3 seconds to load, they leave that website. So that is the trend, right? So the customer base is quite different now. So if you have to handle that customer base, which needs speed, agility, customer experience, so these are the main focus areas. And frankly speaking, we have seen that many of these customers are ready to pay something more to get that. So to answer the question, the customer segment is a little bit different now, which is not with the traditional banking approach, and that is where the new banks comes into picture, and that was the gap which now new banks are trying to.
All right, perfect. So, just to kind of take out some highlights from that so that we can build the next level of our discussion, as Avinash in fact pointed out right in the beginning, somewhere about the interface and experience, which is why there is a gravitation towards platforms which have come now. And, he quoted an example of UPI versus Google Pay, etc., on how the movement is happening. And he talked about the audience is now millennials, which I do think you fall into, by the way. And and of course, Ashish, you built on that, and he explained. So one of the things that Ashish has said, which I do want to keep with us while we move forward, is the limits that regular or traditional forms of banking had, and somewhere neo-banking kind of built on top of that. The reason why I want to keep it is because I do want to discuss the limits that neo-banking could face over a period of time. And both of you come from very, very established companies in your earlier avatars. Of course, Avinash has been there in Zaggle for now almost Avinash? Zaggle was established in 2011, and you have been there since 2012. Yes, so you've been there since 2012. So you've been there, like Niyo is relatively younger, but Mr. Tiwari has had experience in Oracle and Make My Trip. So I would have loved to ask you that from Citibank, when you moved to Zaggle, did you have to explain people this is what I'm doing and all of that in that time, a decade ago? But the limits that we will overall come back to, the limits that neo-banking can also face. Right now, we will go back to our topic, which is creating a neo-banking infrastructure from a user experience standpoint. Now here, I just want to move on. While free from the legacy infrastructure, neo-banking does depend on partnerships with bank itself. Now, can this prove hindrance in user experiences? Avinash, you want to take it first?
Yeah, sure. So it's a trade-off, right? There's a lot of benefits that you get being linked to the traditional banks. You get the trust, you get the risk management, you get the ability to be able to, link very easily to larger systems, right? And the trade-off is that to some extent, you need to, traditional banks for a variety of reasons tend to be slower, right? So the pace at which you may be able to roll out a solution is slower. There will be some restrictions that the bank would put in terms of terms and conditions, in terms of, language, the kind of language that you will have to communicate with for your customer. especially with your TNCs. But I think it's worth it because neobanking is very, as the word says, new, right? And an Indian customer especially is more conservative by and large, especially when it comes to their money, right? And because of that, and the last panel was discussing this, and somebody said that, if in the US, if millennials get a bank account from a Facebook or an Amazon, they'd rather open an account with them rather than a Citi or a JP Morgan. I'm not too sure if that's the case in India. In India, you would see a split. You would see some people wanting to do that, but others would say, I'd rather, keep my money in a traditional bank, which is under RBI, right? Because RBI is the final custodian, and we've seen that in recent past as well. RBI stepped in and saved the day for many retail investors and others. The other point, Noor, here is it's a little bit moot because that's the framework or that's the vision that RBI has envisaged, right? RBI has said that neobanking in India today has to be as a partnership with the traditional licensed banks. So it is the boundary condition, the rules of the game that have been set in India. Now, would these rules change in the future? Possibly, right? And neobanks which mature and do a good job, will they get a license as a bank? I'm hopeful, right? But as of today, the boundary condition has been set by the umpires and the match referee, which is RBI, and it said you have to partner with the banks. So that it is what it is.
Yeah, I think you're trying to make it like safe, secure. It also gave everybody a chance to trust you a bit more and grow, isn't it?
Absolutely.
Yeah, I think you wanted to add something.
Yeah. I think that definitely what Avinash said. The best part, in India at least, people are trusting the banks, and I think this culture is changing. It may take some time. It is like a marathon. It is not a sprint. That's what I believe. And it may take some time to change the culture. While what we are seeing, a lot of things have changed with the Aadhaar KYC. The onboarding can be done in 2 minutes. The video KYC, now the customers are coming up, the banks are coming with the video KYC as well. So things are drastically changing. The UPI stack itself, if you look, has helped in disrupting the way the traditional banking was done. So things are changing. Yes, there are dependencies as of today also. The main dependencies which we see with the legacy infrastructure in banks is that they have different systems. One is core banking system, then card management system, insurance system is different. So when you integrate as well as neobanks, you definitely face those challenges. So definitely we face challenges with the legacy infrastructure, but then there is advantage as well. The customers trust the banks first. So I think we have to build on top of that.
All right, brilliant. We are going to keep building on some of the problems that neobanking can face, and I want to bring it back to cybersecurity, cyber safety. In 2020, everybody went ballistic, right? I mean, internally, our journalists had a challenge. If we can write a sentence which does not use faster digital adoption, or saying that accelerated of digital adoption of 10 decades, of a decade in 10 days and 10 months and all of that, everybody was writing that. Now, from that perspective, also cybersecurity, while everybody was trying to up their game and the solutions, became a genuine concern. In fact, we know people who have personally faced problems, so it's that close to home. It is as simple as downloading a bad app. Now, when it's neobanking and it's 100% digital and mobile, as we discussed right in the beginning, why is it still seen as a safe option, or what is happening right now, barring the traditional partnerships that we just spoke of? What are some of the other things happening right now that really positions it as a safe and a robust option anyone can take?
So let me step in, and then Ashish step in. See, the biggest thing, again, as you rightly said, and that is why the framework has been designed the way it has been, right? The neobank sits on top of your traditional bank. So all the security and all the checks and balances that are required to make the experience as secure as can be, which has been directed by the RBI, and the banks then try to cover it with additional security. All those are already in place in India when you work with a neobank, when you take a service or you take a product from a neobank, right? So then obviously the neobanks like Niyo, like Zaggle, we come in and we build in our own AI, we build in our own interfaces, we build in our own technology layers, data layers, use a lot of analytics to try and create additional security. So that is why, by and large, these solutions are probably at least as secure as a traditional bank solution, if not more. And I would argue in most cases it's more, because there's an additional layer which obviously has its own security as well. Right?
I got it. Ashish, do you want to add to that, or can I just make a point to Avinash's point over here and rephrase my question for you? This whole point of an additional layer, and this got mentioned earlier in the day as well, that there has to be a little bit of advanced layer of protection that should come in when we're talking about fraud prevention or security. However, it has to balance itself with user experience, because after a while it also gets really annoying for the user. Even if I know that this is in my best interest, when I'm really trying to do something in a hurry and we're all always short on time, it becomes annoying, right? How are we balancing, or how do you look as the entire, and like I want you to take a wider view, how do you look at balancing the two, that you do have this additional security which makes it a safer option, but it is not annoying?
Right. So let me answer that. Most of these neobanks have arrow of security options, which customers are not aware of, and it is not impacting the customer experience. So I will give you some examples. For example, when you download any app, at that point of time there is a device binding which is done, which customer is not aware of. So now which this also means is that whenever you try to open this app in any other mobile, or if there is a hacker who's trying to open it, there will be OTP which will be sent on the customer's mobile number. So now no one is aware that it is happening, but at the back end that is happening. That is one. The other is that there are all the requests which are going from your app till the bank, they're all encrypted. So even if there is a person who is able to, transcript your thing, or they are able to, get the data, they will not be able to do anything, because everything is end-to-end encrypted. And many of these encryption algorithms are, in place from long time from the banks, because they have been using that in their CBS or core bank systems. That is one. The other is that, actually to answer your question, a right balance between, the customer experience and the security part. So if you use Google Pay as of today, you feel secure because it is asking your biometric every time. So actually, it also builds a trust when you are asking few questions for doing. So for example, in any application, when you do fund transfer, or you do you are trying to lock your card, unlock your card, and so on and so forth, there is a OTP which is sent. So at that point of time, it may look that it is annoying, but at the same time, many customers feel that it is more secure, but because then they establish the connection with the the company like Niyo or Zaggle, that they are asking, there is a two-factor authentication which is required. So most of these companies are now bringing up two-factor authentication for relevant things, not for everything. For example, if you want to see your transactions, please go ahead and see it after you enter the app password and so on and so forth. And in critical functionalities, that is where the 2FA is there. And as Avinash said, I believe that is much more secure, because you can go within, if your card is locked, you have to call any traditional bank. In this, you can just go and say lock card. It is like within seconds you will be able to lock your card. You don't have to go anywhere. You can unlock your card. You can set your international transaction limits. So from security point of view, I believe it is much more better. From user experience, it is much more better. At times, definitely we ask OTPs and other things wherever it is, critical functions are done. But I believe that as a customer, if I see myself as a customer as well, I would, like to do that, to give an OTP for a fund transfer rather than doing it without any OTP.
Yeah, fair enough. That is true. I mean, at least as older as you get, you really do. Yes, please, Avinash, you had a...
Just to add to what Ashish was saying, right? One of the things that we also do is we give the control to the user in some cases as to how much security would they like, because each one of us is unique, right? So you may prefer more security. I may be willing to take a little more risk. So the user then is able to say that, do you want a limit of say 5,000 before there's an OTP, 20,000, whatever is that limit. And this could be, for various things, not just amounts. I'm just giving you an example of amount. And also, as Ashish said, one of the things which really differentiates neobanks is the fact that if you make a mistake or if something bad happens to you, the ability for you, because you as a user has the control, right? So she as a user can just go ahead and block the card, cancel the transaction. A lot of things that can be done on a digital platform, which is instant, cannot be done through a traditional banking interface, because there's a human element there. Somebody has to take an approval, somebody has to pick up the phone. Whereas here, it's all in the user's hands.
Empowers the customer in a way.
Perfect, gentlemen. We have been speaking about user more at an individual level right now, but of course, at least from our audience perspective, they will benefit if we are able to broad base this to how neobanking is useful also to SMEs and startups in India right now. I do want to take advantage of both of your knowledge about the very sector itself and what it brings to the table, and divide this a bit just from what you're seeing, what you're seeing across everybody doing from a growth perspective for people who are now delving in the neobanking space. Where is more potential in the time to come? Will your growth come from engaging individual customers? Will it come from corporate? Which sector is likely to, or which of the two components is likely to bring more growth in the time to come? And then I'm going to broaden this down or bring this down to how the focus is happening. So Avinash, you want to take the first part and I'll give the second part of him.
Sure.
So you can take it on, where is more growth? I mean, are both getting equal attention, or is there like individuals will play a bigger part in the first level of growth coming in versus corporates like SMEs and startups?
See, I have a biased view because our neobanking platform is completely focused on SMEs. Okay, we are building a SME and startup focused neobanking platform. We believe the opportunity there is much larger. We also believe that the decisioning of the customer is more driven by rational reasoning and less by the heart. And let me explain what I mean. A consumer, even as a consumer, make a lot of consumer decisions basis my brand affinity, right? And how close I am to the brand and how good I feel about the brand, versus a promoter or a founder of a startup or a promoter of an SME is likely to decide more basis using the head than the heart, right? A rational mind. And as a entrant in this space, which is not a Facebook or an Amazon or a Google, we have a far better opportunity to attack the SME market rather than look at the consumer market, is how we look at it. And additionally, I think the SME market has a much larger scope and scale than the individual one. But again, as I said, it's a biased view.
No, fair enough. I think Ashish, you'll have the other point of view, is it?
Yeah. I believe that it all depends. Like fintechs are nothing but startups with unique ideas. Like there are two things. One, if you see the demand definitely is there in each and every segment, whether it is SME, whether it is individuals. Definitely individuals are more, and if you talk about millennials, their requirements are different. I believe that it all depends on what idea you are working on, and what is the target segment. What is your target segment? If your target segment is a mass customers, then your product has to be completely different. If you're talking about affluent customers, your product will have to be different. If you're SME, then your product has to be different. The ask is in all the segments, if that is your question. The ask is there everywhere. It is just that which startup is trying to tap which customer segment. For example, the person who is traveling abroad is affluent. He might be more interested in seeing that what about his FX charges, where he is spending more, and so on and so forth. Whereas as compared to a salaried employee, he might want to see that where his expense is going on, and in which pocket. So I think it all depends on which customer segment you are targeting. That's what I believe.
Fair enough. Basically, the system, the offer, the service is so decent that the potential or the room of growth continues to be high in both areas, is what I understand from what you're saying. Fair enough, I get that. So from our audience perspective, I guess one of the takeaways would be that if they're looking to delve in this sector, they should probably just focus on what their own offer would be, rather than looking at what like a sunshine sector could in this specific area look like. I'm going to just, bring this back to ecosystem. There has to be expectations, or there has to be things that has to happen. And Avinash actually kind of went on it, or, he kind of mentioned it right in the beginning when he said that there is a certain level of framework that has come in play which allows banking in India to work in a particular way. Now, gentlemen, just show of hands, do you think the current way of the way Indian regulation is structured, is it limiting for neo-banking from any point of view? Just a show of hands. If you think it's limiting, just raise your hand. Okay, he thinks it's limiting. I mean, no point at RBI, you don't think it's limiting.
I don't think it's limiting.
We'll go with Ashish. Why did you say it's limiting? As in, what should change?
See, in terms of neo-banking, what I believe, unlike the United States or Britain, neobanks in India are not allowed to hold customer deposits. Now, in a way, we address that. It may be good, but what happens is that in that case, the neobanks, their revenue streams are very, very good. They are definitely monetizing mostly on the bank partnerships, wherein the new bank revenue may be like a stream of opening a current account or by customer accounts or any value-added services which the new banks are giving it. I believe once we have this digital license in India, I think that is going to be a game changer within India, and that is where there is much more revenue streams for the part, and there is no revenue sharing with the partner bank. That's what I believe.
All right, fair enough. Avinash, you want to add to that by any chance?
Yes. So it's not that I disagree with Ashish. I agree that a license really helps. But I think the neobanks also, like us, need to step up a little bit more and show a little bit more traction and scale, which would sort of give more confidence to an RBI that, look, these people know what they're doing and they can be given a license. Because that is, I think, this is my sense and what we have spoken across in the ecosystem, that RBI is not averse to giving neobanks a license down the line. It's a part of their roadmap. They're probably going to give it in 3 years, 5 years, who knows, right? But it's not something that RBI is sort of banned or rejected. But it's just that they feel that it's a little too early in the game, and they want the neobanks to step up and show more, innovation, show more traction, get more people to start to coalesce towards a neobanking or a set of neobanking platforms, and then they would feel more comfortable to give the license. So if you look at how Kotak got its license, right? Kotak Mahindra was an NBFC for the longest time, got tremendous traction, and then the RBI felt in, I think, 2002, 2004, felt comfortable to give a license to them. Same with Bandhan. So that's been historically how RBI has operated. And I think that's the mindset that they are looking at it from.
But Avinash, does it not sometimes, for argument's sake right now, both Kotak and Bandhan were playing in a very traditional framework already. Now, neobanking is coming, which a framework which is supposed to disrupt the traditional framework. Right now, you're meant to be complementary simply because you can't get a license of your own, and hence you need to partner. So right now, you're meant to be complementary. But the moment that goes away, it almost becomes competition, right? It almost becomes like from that sector, there's a change in that sector which will start breaking framework itself. So do you not feel that it's not an exact comparable, or it's not something that really can be seen as a historic precedent to fuel your optimism towards this?
It is and it is not, because I do see a lot of convergence that's going to happen just as it's happening in the West, right? If you look at it, a lot of the, I think Bank of America has made an investment in a new bank. You have Santander who's done something, BBVA. A lot of, I think Citi is trying to do something. JP Morgan is doing something. Even Goldman has its own sort of a neo-banking interface, right? The most traditional of, iBanks. So you're going to see a convergence. You're going to see a lot of traditional banks sort of acquire neobanks or partner with neobanks in a very deep way. And you're not going to see a situation where, the traditional banks are going to be left behind too much, because end of the day, they know that this is where the game is, right? And within that, you'll see new models emerge where you'll see partnerships kicking in, you'll see acquisitions happen.
All right, we are on the last 15 minutes, and I do want to hold some time towards the end for every moderator's favorite question on your advice and your trends. So I will ask you, gentlemen, that too. But before we get to that part, I just want to speak a little bit on neobanking per se before we marry it back to user experience. And I want to keep India into the conversation. Now, we've already discussed some aspects of it on where we are in terms of regulations, and both of you, I think, pretty much have voiced on how the industry either is already on board on what's happening right now and how it will change and how it should change so that the change happens and you can actually unleash the potential that neobanking holds. But is from a present day perspective, what are the characteristics in India that make this a sustained form of growth over a period of time? What are some of our dynamics that make this as an area to watch out for in the long run presence? either of you can take this. Actually, both of you take it. So whoever wants to go first, go for it.
Yeah, see, I would like to go ahead if that is fine, Avinash. See, things are changing in India. Not too long ago, if you see, India's biggest problem was that it had a large unbanked population, right?
Yeah.
With all this Jan Dhan account and everything, things have changed. The scale is now tilting, and the good part is that it is tilting towards the underbanked population. What is underbanked population? People who have bank accounts, but they do not have access to the full range of financial services. Now this is the untapped market which neobanks are going to tap, and hence I believe that this is going to sustain. This is where the neobanks have the upper hand. There are accounts as of today. The unbanked, underbanked people are there. So a digitally empowered customer's journey is going to be something completely different than what we see today. Because it extends to not only having a savings account. He will buy insurance. He will buy various investment tools. They will try to build on their savings. So on, so forth. So I believe that this is going to be a sustained growth. Now it is not going to stop, because now there are many people in India who have bank accounts, and it is just that they have to unleash the potential behind.
All right, perfect.
Okay, just to add to that, right? So I agree with Ashish. Similarly, on the SME side, you'll see, if you look at a typical SME trying to get a loan from a bank today, it's a Herculean task. There's a lot of friction. There's a lot of paperwork. The experience is not great. And that's where the opportunity lies for a neobank. Can you make it simple, quick, respectful, and how do you make sure that it's completely digitized? Because one of the problems that the banks have to service a certain segment is the cost to serve that they have and the cost to acquire, right? Their models are not digital, and that's where the opportunity is. And if banks, frankly speaking, had a completely digital model and they had been on top of the game, banking, if you look at it for a variety of reasons, has the most number of legacy systems in any industry in the world, right? The number of mainframes that you'd see in banking industry, and the number of old systems, as Ashish was talking, a typical bank would probably have over 100 systems which are talking to each other through some complex interfaces, which is a complete mess. So that is where the opportunity lies for a neobank. And I would also add that for example, access to credit, right? Now, banks, being risk averse, are not willing to take that risk and underwrite these customers and go ahead and lend. So what we have done is, for example, we have launched our own card called the Founders Card, which is in partnership with Visa, which is South Asia's first business and finite Visa credit card, and IndusInd Bank. But basically, the whole experience is going to be driven by us, and the bank is the underlying issuer, right? So we are creating products and solutions which address a very clear pain point, which is the founders or the founders of startups, the promoters of SMEs. They need access to credit. They need something which is state of the art, not something which is also ran. And we are providing a state of the art, South Asia's first, as I said, business and finite Visa credit card.
I got it. So overall, we have talked about a mix of things that stands out for India, and pretty much it's everything where the traditional banking sector has kind of not been able to do it, whether it was underbanks, whether the quality of service, or how you make it uncomplex or simplify the offer. That is where the potential lies, and hence, as you mentioned a little while ago, the room for growth continues to be high. We have very, very effectively moved towards the parts where I'm going to ask you about the challenges. Now, both of you would have made your plans for 2021. I'm sure every plan that you made in 2020 would have gone through a crazy change, and new strategies would have come in play. Now, just to layer with whatever expectations you have in 2021, Avinash, I'm going to make you talk again first. I don't know why I'm doing this, but it's just that because you're talking SME a bit more, and I do know from our registered users' point of view, there are a lot of them right now over here. We just give us a sense right now in terms of the big challenges that you foresee in 2021, and some of the steps you took as a company to kind of combat that.
Sure. So I'll speak a little about the ecosystem and what I see from our customers' viewpoint, and what I see from our point, what we did, right? One of the things that I see is a lot of SMEs are coming back and they're seeing demand pick up. Are the banks really keeping pace, or are banks very worried about NPAs and going a little slow and cautious? I believe it's the latter. They're being a little slow. The SME's need for credit and working capital is really, really high today, because they see that they have an opportunity to tap into the suppressed demand, and also the spurt in demand that has started to show some signs, right? And a lot of companies are hoping that those green shoots, you can just leverage them. But is the banking system supporting them enough? I don't think so, because the banking system was, if you remember, in trouble to some extent, even pre-pandemic. So the books of a lot of banks are a little bit, shaky. So that's where the key challenge is. And can you somehow help these SMEs get the access to credit, and so that they can get their business rolling, right? From our perspective, one of the things that we did in 2020 was to really relook at our business model, relook at what we are offering. We completely went digital. So, for example, we used to issue a lot of cards on the prepaid side. Our issuance of cards was 90% physical, 10% digital. Today it's reverse. So 90% is all virtual and and mobile, and 10% is only physical. And we've seen a phenomenal adoption by consumers, by companies, by corporates. And we've seen this pattern emerge across board, even whether we are talking of our expense management platform, the number of SMEs that have signed up to an expense management platform, linked to a GST interface, linked to their accounts receivables. Those are things which they really, really are lapping it up, because they are recognizing that digital is the way forward. And digital is something that they can use to compete with the biggest of the big companies, right? How else would they compete with the large boys, big boys? Their accounts receivables.
Got it. Our speakers are coming in, so we are going to thank God for technology right now, and that we will see the next panel merging right into our panel as we move on. But Ashish, it's your turn now, since you're now talking about people like me.
Yeah. Yeah. See, the challenges which we are going to quickly cover definitely is the customer valuation in terms of the customer experience. And primarily we are going to target three major customer segments in 2021. One is the mass segment. We already have a product which is called as Niyo Bharat, and we would like to expand on that. The other one is the affluent segment. We have a new global product. We'll try to expand on that. And the third one, which we want to definitely target in 2021, is for all the salaried class employees, which will be definitely a new bank product. So those are the three customer segments which we are going to target in 2021.
All right, perfect, gentlemen. I think what we had at least discussed, that these are the broad areas we're going to talk about. We have at least brushed through some of them. I am doing the extremely inelegant thing of looking at my list to ensure I didn't miss out anything, especially because you all already know how good I was in my homework. All right, we are on the last 5 minutes, and I am on my last question. So I think I did follow Ashish ji, the breakup that you had done, Ashish ji, in terms of time division. Now this one is wrap-up question, which is key trends that will see changes within the so-called buzzword, which is neobanking in the fintech sector. So 3 points, 1 or 2 or 3 points, both of you, on the key trends that are coming up. The idea of asking this question is, from our audiences, people who are over here, for them to be able to go back and look at their own business plans. Are they asking their teams the right questions? Are they getting it right? So just the key trends that'll be important in the time to go. Ashish, you first for this one.
Okay, thank you so much. So key trends, definitely one, blockchain is going to be trending like anything, and that because all what happened in 2020 helped to reduce the fraudulent activities, phishing attacks, and secure payment. So I believe blockchain is going to trend. Big data has been trending. It continues to trend because it helps to figure out the best of the offerings, reduce fraud, automating a lot of stuff. And the third one, which I believe it may come, which is like fintech as a service. You never know. That's what I believe. This may come up because a lot of the banks are trying to compete with neobanks now, and since there are regulations as well that you have to go digital now. So I don't know how many banks really have that infrastructure to do. So I believe that we may see something coming up in 2021, which is fintech as a service platform.
Very cool, Avinash.
Yeah, so I agree with most of that, what Ashish said. But I'll add to that. One, I think that you'll see a lot of convergence, a lot of traditional banks getting into neobanking. You'll also see, tech companies, Google's, Amazon's, Facebook's, all get, being interested. They've already forayed into payments, WhatsApp, and you'll start seeing looking at how can I expand that into more, right? You'll also see neobanks themselves look at getting licenses. You may see RBI open some of that, allow part of it at least, right? It may not be deposit taking, but allow lending and stuff like that to start off with. The third, and sort of linked to what Ashish mentioned about blockchain, I completely agree. Blockchain is massive. It's going to be it's actually the present. It's not just the future. It's already happening. But I also think globally you will start to see, and this is more about the global neobanks will start to differentiate because they will tap into the crypto trend. They've already started to, the Bitcoin and crypto trend, a lot more than what the traditional banks can do and will do. So they'll tap into that sentiment, that ask, that need, and they're going to really benefit from that in a big way because there's a lot of latent demand around cryptos and Bitcoins, rightly or wrongly. I'm not going into the merits of that, but that it is there and neobanks will tap into it faster.
All right. For anybody who missed this entire discussion, the single recap would be neobanks are the coolest and the most brilliant. According to both of these gentlemen, neobanking did rise because of the flaws and the lags and wherever there were gaps in the traditional banking system, and because there was a parallel growth of the consumer that is absolutely looking at these kind of changes and these kind of products, whether it's individual or whether it is SME startups or even larger corporates, which is why when I asked them if there's anything limiting neobank, clearly nothing, according to them. Ashish was at least kind enough to say a little bit of regulations, and then both of them very quickly made up saying, but what RBI is doing the right thing and changes will about. So if you're in the space, you're really looking at some golden time ahead. Some good advice did come. Both of them recapped with the trends that you should look at. Blockchain, both of them did mention big data. And I think Ashish has again successfully added a new buzzword, which will be finance, fintech as a service in the time to come. So if anybody gets fast later, this man should be blamed for it. Yes, more or less, these are my takeaways from it. Avinash was very, very optimistic. So he's talking about conversions. He's talking about how traditional banks are going to get into this whole neobanking, the neobanking space. Neobanks will get their own licenses. The competition will start changing. Both of your partnership will come under play. People like me will be very happy when we write those stories. The crypto trend, and that will also push towards a move towards growth. With that, I must really, really genuinely thank Ashish and Avinash both for your time, for awesome answers, and for not making me look stupid because I really didn't know what was happening. So thank you, gentlemen.
You were fabulous. Thank you so much.
Thank you, gentlemen. Thank you, Bhavna. Leaving it to you and we are off.
Thanks, Ashish.
Thank you.
Stay in touch. Bye. Bye.